Hello, everybody. It's an absolute pleasure that today I'm having a chat on the current situation globally, as well as on financial services more specifically, with an expert like Richard Turrin. Now, probably many of you don't know Richard, but he is a very big voice on social media. As an expert in innovation in general, with his latest book, Innovation Lab Excellence, also, does he have decades of experience in banking technology and fintech, and that's what he's always writing and sharing his opinion about. Now, aside from that, he's also an American currently living in Shanghai, so he has a pretty unique view on the global impact of Corona. Now, Richard, how are you doing? How's life over there, given the circumstances?
I'm great, and part of it is just dumb luck. And I'm going to tell this story because I think it's relevant for everybody. I live in Shanghai, but a few days before Chinese New Year, I left for Taipei because my wife's family is from Taipei, so we all go home for family reunions for the New Year.
Right.
And I was fortunate to be out of Shanghai and China during the worst part of the coronavirus problem. And I was in both Bangkok and Taipei. I was away for 6 weeks. I came back last week. And what was amazing is how fast everything changed in China and how China adjusted itself to the coronavirus. And we'll talk about this in a second, how they use digital systems to control and monitor. But at the same time, what was amazing for me is that when I was leaving to come back to Shanghai, Shanghai had actually become one of the safer places to be. Mm-hmm. So when this first hit, we were certainly happy to be away from China, but now we were both my wife and I both were very happy to return because Shanghai has excellent public services. The apartment complex where I live, before anybody comes and goes, you have to have a pass, they take your temperature. It's very, very well controlled or well monitored. It's a well monitored place to live, so your safety is relatively high. And here's the irony. Shanghai, for the last 2 or 3 days in a row, the only coronavirus cases they had were actually imported from people flying in from Europe or the United States.
Right.
So, that's the changing world we live in. But travel and all of the restrictions were very relevant for me and my wife. We lived them. And ironically, we're very happy to be back in China right now.
Okay. And in terms of like the economic situation for you personally, how is it still impacting? I suppose it's still impacting you, right?
It impacts.
In Belgium, we don't really know because all the news is packed with more local circumstances, conditions, etc. So from China, we don't know a lot.
Sure.
Could you please give a view on that?
It's very simple. Walk out onto the street of Shanghai, and the streets are, I won't say empty. They have ceased to be empty, but they are maybe 10% of normal traffic, 20% of normal traffic. So people aren't going out. The mall that's right across the street from where I live is empty. The coffee shops that I go to are fortunately open. Here's the good news. I can go to my coffee shop. That's nice because I can get out of the house. But there's 6 people in the coffee shop. So yes, it's impacted everyone. I have no basis to talk about manufacturing other than what I read about. And I can tell you this, the skies of Shanghai are crystal clear blue. And that means that the electricity is coal-fired. They're not producing the electricity, and whatever local factories are on the periphery of Shanghai are obviously not producing up to their normal amounts. And so yeah, it's a very different world. And the economic numbers, now this you can find on Bloomberg, I have no additional insight. Yeah, the numbers are bad. And it's not just China, it's many places will be hit by this. The news for China, and I think this is where we can start to talk about digital things, and I will perhaps venture into what is a slightly political statement. China's solution of lockdown was widely criticized in the press in the early days. That it was draconian, it was unfair, it was bad. All I can say is that right now, it seems like a pretty good idea. Now, I understand there's a lot of caveats, particularly China's early response to the virus, which has been flawed and perhaps rightly so. I won't argue that. But right now, China has this under control. If China can do it, the rest of the world can do it too. Now, what's interesting about China, now this is relevant to our line of work because we're both in digital transformation, digital banking, stuff that uses technology, is that from the very beginning, Chinese government immediately reached out to the big tech companies, and that includes the likes of Tencent, who runs WeChat, and of course, Ant Financial, who runs Alipay. And they said, hey, you're digital, you can be part of the solution. And what's very interesting to me, and I posted this article on LinkedIn, is that when I came back to China, I was immediately told at the airport, before I got to China, actually, I was immediately told to scan a QR code. All right, so big thumbs up for QR codes, because every airline in the planet flying to China can just print out a QR code and give it to you and say, hey, scan this. And we were all told to download a health app that was part of the mini programs for Ant Financial's Alipay, which everybody uses here, and also another health monitoring app that was part of WeChat. And those are two of the pillars of controlling a coronavirus. So the WeChat app, when I returned home, told me I had twice a day, I had to input my temperature. And after a week of monitoring, it said, okay, your temperatures are fine. You've had a week of monitoring. You're now in the clear, no problem. The Ant Financial app was different and very interesting. It looks at where you've been, and where I'd been was outside of China. And it looks at who you've been around to determine whether you are a color code of red, yellow, or green, meaning that the app gives you a categorization. You push the button and your picture comes up and it has a QR code, and the QR code is green, which means you're free to travel in Shanghai, yellow, which means you have limited travel access, and red, stay at home. And the color...
Do you think this kind of things will also impact the way we look at privacy in the future?
Oh, absolutely. And there is no question that this is a major privacy issue, and there are no question that apps like, and Google right now is looking at apps that have some ability to look at where people are going, perhaps not with the same level of personal tracking. I understand China is unique, no argument. And I understand that the apps that China uses may not be directly transferable to the West, but we have a very unique pandemic situation right now. And and here's how China looked at it, and I'm sure of this. China had at one point at its peak more than half the population. The number was around 740 or 50 million people under restricted travel. Okay, so by giving this app that categorizes you red, green, yellow for Ant Financial to build it and to distribute it, they were able to use a scalpel to determine who is at high risk, who is at low risk, and who can travel and who cannot. And if that allows, and it did quite literally allow hundreds of millions of people to begin to resume on something that resembles normalcy, not full normalcy, but something closer to that, it's a good thing, helps the economy, helps people avoid what you are currently living through, which is you're at home.
Yeah.
So I understand there are privacy issues here. But I'll toss this one out to you, Rick. And I know this is just between you and me, and I know there will be lots of divergent points of view. Would you subject yourself to online tracking if it allowed you to go out to your coffee shop today?
I probably would, especially if we have the guarantee that it's exceptional and short term.
Exactly. And that's, so I fully support that, and I fully understand that China apps are not directly transferable, but you would make that call where you give up some amount of privacy to gain the ability to travel again. And I think many people
could even imagine that with the most recent technology, you could even anonymize that it's only usable for yourself.
And now I haven't looked today, but Google's quotes from 2 days ago were that they're working with the government and they're looking at how exactly to anonymize whatever position data they may or may not, because they are tight-lipped about exactly what they're going to do, but they're looking at anonymizing that data. So there is a halfway point here, but what's valuable for the West is to say, look, China has this. They were the first struck with this. They have digital apps. What part of those digital apps will be valuable for us? Take the good, leave the bad, see what is possible. But the major point is that what was interesting to me is that the Chinese government very early on recognized digital as a potential solution to the problem and immediately engaged the major tech players to help them categorize people and to monitor the coronavirus. And I understand that it's hard. Nobody likes it. I don't like it, but it works. I'm able to go to my coffee shop, and Shanghai has 0 new infections for about 3 or 4 days in a row now, apart from those that were imported from travelers who are coming from EU, US, or other parts of the world. So they had, I think it was 15 new cases the day before yesterday. Every one of them was imported.
Yeah, that's what we read as well.
By the way, it was interesting for me because the week that I got back, I only had, I think it was 4 days of actual home quarantine. Now all new arrivals have mandatory 2 weeks.
Yeah.
So I was very lucky to get back when I did, because I would be on total lockdown for 2 weeks at home if I was a foreign returnee to China.
Yeah. Now let's move to banking now.
Back to what we do for a living, right?
Exactly. We're not the health experts, right? But we're not. Very interesting to see how they treat it and to dig a bit more in detail into that, for sure. Now, what we're living today is probably an economic crisis I have never ever experienced in my recent life, 35 years. Now, before going to the consequences of that, or maybe not, the first question is based on a study that you shared last week, I think, by Accenture, that showed that only 43% of consumers currently trust their bank to look after their long-term financial well-being. Now, today, or at least this week, I heard quite a few people saying that this crisis may be the revival of banks, where in 2008, they were the creators of a crisis. Probably this time they may be the saviors, or the ones that have to resolve the crisis. Do you think the number, the 43% that Accenture states of trust, will go up again now consumers look for more safety and for guarantees that can be provided by banks?
Yeah, that's a really interesting question. And let's look at it in particular with respect to neobanks or digital banks, or in UK market, challenger banks, okay? So you've got this new concept, digital banking, all right? And they are right now trying to assert themselves and grab as many clients as they can from the incumbent banks. And so 43% of the population says, hey, we don't really trust our bank, we don't really like our bank. And after 2008, that's not really a surprise. People don't like big banks. We don't like the fees, we don't like the penalties, we don't like what people often refer to as the fine print, okay, of service charges. So you can look at this in two ways. One is there will be a flight to safety, and anyone who is afraid for the well-being of their savings will run from neobanks, all right, because they want the safety of a large institution that's been around for a couple of hundred years, oftentimes. But on the other hand, we are all now in the middle of home lockdown. What's interesting is that the neobanks are 100% digital, including sign up. So we can start to use these digital institutions without ever leaving our house, and nobody will ever ask you to come to the branch to sign something. So
luckily we have that in Belgium with the incumbents already as well.
Okay, good.
Digital onboarding, etc., is all there for the incumbents as well. So that shouldn't be the issue.
And that's a really good point, because what's happened in the last 2 or 3 years is that the incumbents have spent a lot of time and a lot of money upgrading their digital services. But that said, if you look, and I have an example of this from, I won't use their name, but I have a small bank account in the US, and they're very undigital. They're just not there. They're a small regional bank. Literally, my father knew the president of the bank grew up with my father, kind of thing. Quite literally did, and I respect the bank, but they're digitally way back. And how are people going to deal with them if they are not digitally sophisticated? So you've got sort of this balance of two things going on right now. I see two factors. I see a flight to safety has not yet manifested itself, because while the market has obviously crashed, no better adjective than that, it has crashed, there has not been stress as of yet reported in the actual banks themselves, where they have liquidity problems in the sense that their trading book has some liquidity issues. But as far as the safety of deposit accounts, there's been no issue there whatsoever. So I don't see this as a banking crisis like 2008 that makes people terrified to keep their money in the bank, and you'd have a flight to safety.
I mean, that's at least the case in Belgium and Netherlands, for example. You see the flip side. Banks that start saying, hey, dear customer, if you can't pay for your mortgage this time, let's delay the payment without any penalties. Hey guys, start using contactless because it's more healthy than using cash. And all these, they start pushing digital more or less.
Good. So here's the good news for you and for me. We're both in the digital banking business. It's going to be good for digital bank. Ready? There is no going back. Okay? It's over. If the concept that you're going to go to your branch, look, if you're in the cash business, I understand that. You may have needs make you go to the branch, but that business is going to be reduced, and people don't want cash. Hey, in China, they're taking the banknotes from Hubei province and they are burning them. The United States is taking pallets full of $100 bills that are coming from China and sticking them in a corner and quarantining them for 5 or 6 weeks. So let's face it, we're going cashless, and we're going cashless faster than ever. because nobody wants to touch dirty money. And it is quite literally a way to spread contagion.
Yeah. Well, we're gonna come back on that later on. Let's first have a look at the whole fintech industry. That was until a week ago, let's say, the news was dominated with massive takeovers, record investments. Now that's cooling down. Probably the result of a massive cool down of the industry or of the world economy as a whole. How do you think that's gonna evolve? Can we expect a bloodbath in the whole startup scale-up scene with a few giants to survive, or is it too dark to be true?
Too dark to be true. Let's look who are the winners and who are going to be the losers in this new world that we live in. The losers. Neobanks are potentially losers. Let me explain why. Not because of anything having to do with the services. The services are fine. The problem is they're paying out to buy customers, to get you to sign up for the neobank, at least in the United States and in Europe as well. They're paying higher rates of interest. Well, we're in an ultra low interest rate environment, which means I did some calculations for the US neobanks, and it came out to be they're losing roughly 1.5 percentage points per customer for every deposit. They're funding on the shorter end of the yield curve, and they're paying out 1.7%.
Yeah.
How are you going to pay for it? Okay, if you have, and what we had until 2 or 3 weeks ago were healthy, deep-pocketed investors who were happy to fund them with additional cash so they could buy more clients, and that interest expense was cheap. Who cares?
Yeah.
I'm not sure that those deep-pocketed investors will continue to exist. And we can also say that there are a lot of neobanks, all of whom have exactly the same product. There is very little difference in product between one and the other. Yes, there are some differences, but it's a bank. It's pretty much doing the same thing. So some of these guys are going to be losers in this battle because they're going to find that their investors have cooled. Their investors simply don't have the money that they had a month ago. That's the reality. All of a sudden, everybody loses. So losers potentially on the neobanks, and it's not for any fault of service. It's just that their business model costs money, and they may not be able to all find new funding. Second one, innovative fintech without clients. Ready? I'm a fintech. I've got a great client. I've got a great idea. I have no clients, but I have investors who are supporting me. You're dead. Your investors have to have a tremendous amount of vision to stick with you in these sort of circumstances. Okay.
Unless they're serving banks to become more digital.
Yeah. Now look, the flip side of this is if you're a fintech and you have a client base revenue stream and things are looking relatively positively when you look at the numbers, God bless you, you're probably in as good a position as you can be for a new company. But if you're one of these fintechs who is visionary and the investors have bought into a longer term vision that needs to be funded, that's going to be hard. Again, where's the money going to come from? And I'm not sure anybody has the patience to continue funding them long term.
Or they will be investing these uncertain circumstances. Because we don't know what's going to happen tomorrow, next week, next month. We don't know.
We never do. And here's the thing. We like to delude. Look, none of us know. And the thing is, we like to delude ourselves to the fact that we think this would happen. But now look, I'm old. I will admit publicly that I am 59 and more than a half, okay? So I lived through 87. I lived through these crises already. The dot-com bubble. I lived through the financial crisis. I've seen this stuff from my seat on a trading floor 3 freaking times so far. So we like to think that it's not going to happen, and we delude ourselves that stability is the norm. It is not. I recommend only one author, and that is Nicholas Nassim Taleb, who wrote Fooled by Randomness. He wrote Black Swans, and he wrote Skin in the Game, one of his more recent books. So he writes about this all the time. So we delude ourselves. This is normal. Volatility is in fact good, and we've lived under a decade of suppressed volatility because we look to the Fed to solve our volatility, thinking volatility is bad and should be omitted, when in fact volatility is normal and should be,
but it's bad. It's like, well, maybe not the right comparison, but it's like the flu. It's bad, but it's there. But we learn how to deal with it. We know when to expect it. We know how to cure it, etc.
Absolutely, absolutely. Hey, I want to talk about, we're talking about winners and losers, right? Mm-hmm. So we talked about neobanks as losers. We talked about innovative fintech without clients being a loser. How about the loser? And I don't want to talk too much about it, but crypto fans, Bitcoin holders.
Yeah, what's happening there? It's going down massively, but I expect in certain times pretty certain revenues, but that's not happening.
Not happening. Look, you know the expression, the German expression, Schadenfreude. Schadenfreude means to find joy in somebody else's pain.
Yeah.
I have no Schadenfreude. I take no joy in the pain of Bitcoin and crypto holders. But it is important to point out one thing. The early advertising for Bitcoin was always that Bitcoin is digital gold. It is an uncorrelated asset. It is something to hold in times of crisis. And what we learned is that crypto is just as fickle and subject to market falls as stocks, bonds, and anything else. So calling it non-correlated, calling it a safe haven is not exactly true. And look, if you're listening to me and you got crypto, I feel for you. I don't hate crypto, but we got to be honest about what's there, okay? And the advertising saying that this stuff was digital gold, non-correlated, not true, and we certainly learned that.
Right, but in some crises in recent history, you did see a rise of crypto in uncertain times. So what made current prices different from those?
Now I'm stretching. I'm not a crypto expert. One thing that impacted it without question is that many of the crypto lenders lent to people who took the money they borrowed and bought more crypto, leveraging themselves. Therefore, when crypto dropped, they had margin calls saying you need more collateral, and then they had to sell into a falling market. That was one factor. But I think it's fair to say, with massive market dislocations like this, that crypto, like all other assets, there's no buyers. People flee to cash, and so crypto is a loser in this this marketplace. But let's look now at the winners and look at the other side of this. There is a new category of digital asset that is being proposed, and these are central bank digital currencies.
That was going to be my last question, but please go ahead.
Oh, it's going to be your last one? That I didn't know. But anyway, look, so central bank digital currencies. One of the winners potentially in this are central banks who will issue a digitized version of fiat currency. And they may or may not use blockchain to do it. Don't get hung up on what technology they use. China has been one of the leaders. They're going to launch this year. It's delayed now. But China has been very vocal about saying, hey, we can't use blockchain on this because it's not fast enough to cover our needs. But as we said earlier, this is the time for digital cash. And in that digital cash movement, you're going to see central banks also going to issue digital currencies because it allows for digital transfer of funds, a true digital fiat currency that you can have on your phone. You can use it to pay for things. It will be instant payment. It will be a real currency, and I don't mean that in a derogative way toward crypto holders, but it's a digital national currency, and it's going to push them along. It'll be good.
Isn't it also going to be a tool for national banks to have a more direct impact on the global economy? Because from then on, they can start distributing cash to the consumer directly instead of having to redistributing it through commercial banks?
Well, absolutely. It depends on how they set it up, okay? But the answer is it allows the biggest point in favor of a digital currency is that it reduces frictional cost of cash transfer within the economy.
Yeah, that was the main argument until a few weeks ago.
And that argument is still there. And that's a fundamentally good thing for, in the favor of digital currency and central bank digital currencies. A bad thing for banks because banks make a lot of money on taking very small amounts of money out of your cash transfers. So another good thing for, so the winners, CBDC, this other big winner, I think, I mentioned already, fintechs who have, who have a viable product and who want to exit. They're going to be, this is going to be their time. It may not be easy for them to continue going it alone. I think their prices are going to be depressed a little bit. So clearly they're not going to be exiting at the peak of the market, but this will be their time to say, all right, we've gone alone long enough. We need to, I don't like to use the sell out. We need to partner with somebody. Okay. That's a nicer turn of phrase. And the other winner with this will be the incumbent institutions who want to acquire new digital skills. They're going to be able to buy them on the cheap. Most of the banks still have piles of money. They want to buy a fintech, and they looked at them at $1 billion before, and they look at them now. They're a real deal at 200 or 300 million. I don't know if the levels are that, the drops are that big, but there will be substantial price drops. It's going to be a buying time for incumbents right now to pick up fintechs on the cheap.
Now, maybe, well, given your background experience and your current country of living, what do you think the impact of current crisis will be for China's influence on the global financial world?
Oh, that's a really fascinating question. It's going to be a tough one. As far as China's impact on the financial world, it will be tremendous. Okay, let me explain something. A recent Financial Times article talked about this. In 2008, after the financial crisis, China extended huge amounts of credit to its corporations and to people to buy stuff and to keep the economy stimulated. That was fundamentally positive for Europe and the United States. Chinese people, Chinese corporate entities had large amounts of money which they could use to buy Louis Vuitton or Gucci bags. Factories bought German machine tools, or this is real from my own life. My Italian cousins are in the Italian textile business. They bought Italian textile machines. And China very much helped bail out the rest of the world because China was still buying. What we're going to see with this crisis is that, yes, China is extending large amounts of credit to its banks, but mostly to support small and medium enterprises so that they can continue to operate and not close their doors. This will not be the big buying opportunity that we saw in 2008, that is buying opportunity for Chinese large corporate entities to go out and buy stuff from Europe or the United States. Right. And so China's the second largest economy, first largest in some ways, depending on how you parse the numbers. It's a major player. It isn't going away. It is still tremendously important. But what China will not do is bail out the rest of the world. And that's pretty much, and I'm sure there's varying points of view on this, but China post-2008 was a tremendous engine of a recovery engine because it spent so much and because it consumed so much from the rest of the world. That's not going to happen.
I guess is also that after the financial crisis, globalization continued evolving to an even more globalized and interconnected world. And one of the, I hope, short-term consequences of the current crisis might be a deglobalization and a localization again, to some extent.
Yes, I have a bad answer for you. I don't know. Because, this is such big picture stuff that it's hard for me. But here, look, but there is another angle to this that I'm going to talk about. And so China's economic importance will be unchanged. It will still be tremendously important. And there are two other factors that are going to happen. What will China's soft power be? And interestingly enough, China is sending medical supplies, ventilators, masks to Italy. They're sending their experts. Everywhere. And China is reaching out to the planet to help them. They've, it's not fair to say that China is trying to export its way of dealing with the crisis, but at least they are putting their people out there to say, this is what we did. Fine, and train your people. We have techniques that work for us. We can tell you what worked and what didn't work. And there was a headline in Bloomberg just yesterday or the day before, and it said the Chinese scientists said, you did exactly what we did in Wuhan in the beginning. This is what you should do now. And if that advice helps people, helps the spread of the virus, it's a good thing, and we will all be grateful to Chinese know-how and doctors and technology if it helps us to tamp down this virus, and that's a good thing. So their soft power, ironically, may increase after this.
Hey, Richard, thank you very much for your time. It has been a great interview and probably the longest I ever had for the banking scene. But it's a great topic and a lot of food for thought, I'm sure. So let's continue the discussion online, I would say. And let's stay in touch.
Rick, I very much look forward to it. It's been wonderful to talk about China, innovation, neobanks, who the winners and losers are going to be in all this. I have to do this. I have a book. It's called Innovation Lab Excellence, Digital Transformation from Within. And the key word is from within. In other words, your company should be digitally transforming inside itself. The book is available on Amazon globally. So it'll ship, it's on whatever local Amazon you've got. And I'm really proud of one thing. The book has a review score right now of 4.9 with 31 reviews from all over the world. I'm very proud of that. It did go bestseller in its early days. I'll admit it is not a bestseller right now on Amazon, but it was in the early, when it launched. It's a nice book on digital transformation and how to run an innovation program. Whether you call it a lab or not is irrelevant. But if you want to run an innovation program, it's a book that can help. and I hope some of your readers have a look, or
All
your
right.
listeners have, I should say, have a look.
Yeah, both. We're going to make a transcript for the ones who prefer
Okay.
reading as well. Thank
Great.
you very much.
It's a pleasure. Thank you so much for having me, Rick.
Thank you.